past, that works out. But if I need to go there to make sure that, something's done right, all that kind of stuff, it makes for a fun trip,
It's a tax write-off, right? So that's kind of a nice deal. But
Absolutely.
Let us know if you need anything. We have a contractor crew on the ground there. We're working on some property management relationships.
Oh, very cool.
And we have a fully licensed team.
Oh, nice. So,
yeah, it's busy. Alexander actually is in Vegas right now too, so it's been great just trying to help do all that we can to help serve some of the different investors that are part of our network.
Oh, very cool. Awesome. I appreciate that.
Frank, do you know Melina Boswell and Andrew Boswell and the New Wealth Advisors Club out there in Riverside?
You know what? I don't know them, but I've heard of the club. Yeah.
Okay. Yeah, they've come on a few times. I actually I went to school in Riverside, so I lived there for like 3 years.
Oh, did you really?
Yeah.
Oh,
Riverside
crazy.
and Corona.
Yeah, okay. That's right. Yeah, nice. Oh, that's awesome. That's a club that I'd like to how often do they meet?
I'm not sure what schedule they're on right now. Maybe someone on the call, if they're in the club, they can let us know. But
absolutely. Oh, that's cool.
Yeah, because like they were having meetups and stuff. Like they have the office over
sure.
on it's off of down Adams, and then one of the side roads by the university, by Cal Baptist University.
Yeah. Oh,
yeah,
very
beautiful
cool.
office. Oh my gosh, I love it.
Oh, that's nice. Yeah, I'll have to take a look at trying to be a part of that. Yeah.
Well, let us know if you need anything. Good to see you on.
Oh, thank you. I appreciate it. Thank you very much.
Yeah, welcome. Thanks for joining us, Frank.
Thank you.
Let us know if you need anything ever. We're around.
Absolutely. Thank you.
Yeah.
Happy Aloha Friday, everybody. Oh,
Friday.
See Mr. Katian over there. Is that the home office, bro?
Yes, sir. I just jumped off from another Zoom. That's why I don't like having my thing in the back.
So I know.
Okay, we like spy in the back. Try to see the blueprints. Try to see.
Here's the lead sheet.
Oh my goodness. What's up, everybody?
It's a great day to be alive.
Yes, sir.
All kinds of goodness on this Friday.
We got kind of a lot of stuff to talk about.
Well, there's so much happening in the world right now, man.
Yeah.
Have you gotten your vaccine yet? Are you doing a vaccine? Yeah, are you doing vaccines?
Probably, but I don't know where I fall on the list. I think I'm immune to this thing because I should have caught this thing like a long time ago, I think.
100%. It's interesting stuff. Well, cool. We're ready to rock and roll. Let's talk through all kinds of fun stuff today.
Yeah, I see Blaze. Did everyone hear about the Fannie Mae update? Okay, yeah, let's talk about that.
Yeah, today I think Corey, you and I talked about just today. Let's just do a free for all conversation just about all that's going on as we start moving from quarter one. It's already mid-March, which is crazy. 1 year of coronavirus behind us. It's nuts. But then now we're moving into quarter two of 2021. So much to talk about in the market right now.
How's the holding room looking?
It's good. I'll monitor it. You go ahead and get started.
All righty. Well, welcome everybody. Hope everyone had a great week. I believe it's Friday already, but there's a few things, kind of topics we wanted to talk, like kind of just throw out there for a collective discussion today. So no real like agenda, just kind of open forum. Let's kind of put our heads together, talk story, see who needs help. But with that said, why don't we start with our leads, needs, and good deeds? Anybody got anything? I know a good deed. Congrats to Daniel Kong for being the selected attendee for Vince's book.
Right on, bro. First thing I think I've ever wanted in my life, so I'm stoked.
I highly doubt that, but that's funny.
So what did you win?
Book.
Sweet. Corey will give you a copy of his book. Oh wait, no more.
Man. Looking forward to it. How to be a boss.
No. Alex and I talk all the time, man. We're like, man, when we're done, we're gonna have so much stories. Alex is just a story machine. If you're ever bored, just give the guy a call and ask him to tell you a story. He's got like a zillion of them.
Half of them are like his own making though, too, of his craziness. But he just make good stories, right?
Yeah. And with that said, actually, I can tell he's on the phone, but that's probably perfect. So he's got one more week left in his 75 hard challenge. And so everybody gotta, root for him, cheer him on. He's almost there. Can't believe he actually did it. That thing was intense. But yeah, so by Friday, hopefully he stays on the wagon. There's a couple close calls he was telling me about. So, but he's making it so far. He got 7 more days left, and we can we'll all cheer for him. It's very inspiring.
We were just in Vegas last week with Alex, and this guy was literally walking at midnight, doing like 45-minute walks, and then doing like 45 minutes at yoga after, going out and drinking all night. And then we'd come back and he's like, oh, I got to go on my walk right now. I'm like, dude, like, you're crazy.
Yeah.
Committed. Very committed. I'll say that.
Yeah.
He's like an adult trapped in a 4-year-old body or something.
Yeah.
Or maybe he's a 4-year-old trapped in an adult body. We're not sure yet.
It's hilarious that he's on the phone right now.
Yeah, he has no idea we're talking about it, but it's pretty cool.
I got a need if someone's available. I'm looking for I need a conventional loan from either FHB, Bank of Hawaii, Prime Lending, or ASB, with like a investor-friendly agent or investor-friendly mortgage loan officer. So if anybody has something along those, like a good contact in Hawaii for one of those banks.
Well, I got somebody, but if there's somebody on the call, I'd rather us help each other, see if we can get Daniel in front of the right person over there at FHB.
Yeah, it has to be those banks because I've got 2 loans I need to close, and one of them is for for Ali, like one of the condos, and they only have they only accept those 5 lenders, I guess, right now. So
gotcha. Hey, Justin, I'm not sure if you're busy, but not sure if you can help Daniel. Justin is
I reached out to Aloha Lenny, and the lady said I guess the main lady said she's gonna get back to me, but then they're swamped, so I think she was like, this is like early last week and she hasn't got to back. She said, I'll get back to you, but then I don't know, it's not looking good, I guess, for as far as their load or whatever.
Gotcha.
I got you. Sorry, Daniel. I missed what you were, what lenders you were talking about needing to use and your scenario. But well, we got each other's number, so maybe after the call, we can get in touch. Yeah, because that's what I work. I'm at Aloha Lending, so I understand the volume is high and maybe why you didn't get a response from whoever you did contact. But we can talk after.
Yeah, shoot, sounds good.
That's because you never talked to Justin. You got to talk to the main guy.
I know, bro. That's why I didn't have I should get the hookups.
Get the hookups, bro. Justin's going to charge 0 origination points, like 1% interest.
Yeah, bro, I don't mind paying, bro. As long as all I care is about getting the loan done, bro. That's all I care, honestly. Like, I'll pay whatever points.
Oh, perfect. Okay, Justin, we split them at 5 then.
Oh,
that's awesome. Cool stuff, Daniel. Anybody else have a need or something that you're looking for?
I just want to kind of check in with you or Josh. Josh has a deal on the line in I think it's Kansas City with and CJ's helping him. And I want to say congrats on that because he's in contract and learning a lot.
What's the deal?
I think it's a burr.
Oh, nice.
Right here.
Hey, Josh.
How's it?
Yeah, tell us about the deal real quick, and if you need anything.
It's just a basic burr that's in Kansas City. So single family. I don't know what much details there are, but I mean, everything's going good. We already know like our scope of work, everything. My private money lender is my mom, so
All right.
we're gonna be having fun. But I have to cover all the gap and the repairs, so I'm basically gonna be putting up like 70 grand anyways. So okay.
That's awesome, man. Is this
Yeah.
your first one?
First bird, yeah.
Are you moving forward with it, or?
I'm basically 90% sure, yeah. So
Okay.
How did you source the deal?
it was off market, kind of like a pocket listing from an agent.
Gotcha. And so have you gone to see the property, or are you just going to do everything from a distance?
Everything through distance. I'm too lazy to go in person. So.
Well, it's lazy in one thing. Is the other part is who really wants to go all the way out there.
Yeah.
But that's awesome. So that's fantastic. So you're going to do, you're going to source the deal. You source the deal. You're going to gap fund it. Your mom's the PML. So that's fantastic. And then what's the purchase price?
Purchase is 86.5. I think our Reno budget is going to be around 30 to 40K. And then we should refi at about 130.
Josh, how old are you now?
I'm 20.
He just turned 20.
Wait, no, 21. Just turned 21. I got my gun permits. Yeah.
Yeah. I think I knew you back when you were 10 years old.
Church. Yeah, I used to go to church all the time.
Yeah, that's awesome, man. Super excited that you're in the real estate world. That's an awesome deal. What do you need help with on that deal?
Nothing really. I mean, I'm planning on doing like a couple more at the same time. So maybe private money down the road, but right now I don't really need any funding.
Go get them, bro. And I know CJ and Jasmine were helping too. Yeah. So big thanks to them.
Yeah, they got all the contacts. So you don't have to go through like, all the crappy contractors and stuff. They already got their guys.
You got the team. Yeah, that's huge. Yeah. Right. Yeah, I'd like to hear what's going on in Kansas City. Like, how come they chose that market? So I see CJ's on, but he might be away from the computer.
There's quite a few.
Oh, there he is.
Beach right now. He jumped on for once. That's crazy.
Oh, what's up, CJ? So what's going on with Kansas City? How come Kansas City? What's the deal?
Oh, cash flows. Simple.
Huh? Oh, cash flow.
Cash flows, and we have a great team there.
Yep. How did you guys stumble upon that market? Did you just kind of, you have family over there, or you just kind of were identifying emerging markets, or?
Similar to this, just met some people in the networking platform that suggested Kansas City. So we tried 3 markets, and this is the one that stuck.
Nice. What were the 3 markets you guys tried?
Indy, Kansas City, and Florida. I mean, we're still pretty active in Florida. Indy was our first go around, but Kansas City, we were able to build a team quickest and be able to secure all the deals that we're looking for.
Nice. Okay. So is Indy, how's that market? Is that still kind of doing okay, holding up?
It's crazy hot. I mean, we have our one and done there. It's like every other place right now. Slim pickings, markets oversaturated. Just had a really challenging time establishing team. A solid team that we could trust. And I've yet to find anybody that I could grow there. I even transitioned a friend of mine out of like 6 or 7 deals in Indy and got him plugged into Keys.
Got it. Is Indy more just cash flow, or is there some appreciation that has been going on?
In my opinion, Indy's identical to Kansas City. Numbers wise, rent wise, appreciation wise, the different types of markets and neighborhoods you could buy in. For me, again, it was just having that solid core team and being able to build it there. I think personally, Indy is saturated, and it's just saturated.
Got it.
CJ, have you talked to Daniel about Indy, because that's kind of Daniel's sweet spot?
Yeah, me and Daniel have chatted a bit. I guess my main point is I'm not looking to grow in Indy, so I have no need right now to establish the relationship. We're doing really good in Kansas City, and I'm a person of focus, right? So I want to just fixate on a market and become the expert.
Yeah, we chatted a few times back and forth, and like if I was in his shoes, I wouldn't jump ship either. Just like the split focus, right, and like your team. So that's the whole reason why I'm not going to KC, which is the same market as Indy, like, as far as numbers wise. But yeah, I feel like Indy is, over the last 2 years, it's like it got too known or too famous. So like there's so much investor activity, so it's a little harder to find deals now than it was probably 2 years ago, I think. So, but both of them are excellent markets.
I think that's so cool to hear that, because there's so many of us, when we get into real estate investing, we want to do every market and go wherever we can find any deals. But at some point, you're just kind of all over the board. And so to be focused like you guys are with Indy or Kansas, I mean, that's pretty cool. That's a great strategy. Kind of grow deeper and stronger, as opposed to just kind of being wide and breadth all over the place. I like it.
Well, CJ, one last question before we jump to another subject, but like what is because I don't know anything about Kansas City, but I keep hearing it come up. So what would you say is the number one like economic driver in that market? Like for us, it's tourism, right? But what's out there?
Oh gosh, they got a list of things. Like medical tech is big. If you look up this company called Cerner, they were the big indicator for why we wanted to plug away there pretty heavily. Cerner is like this medical tech company, and they basically bought like shopping centers that went under and built these massive manufacturing or office building complexes. Something like 4,000 jobs were created just by Cerner. There's the Ford plant. They're very big on ag and like what is it called? Like meat, produce, meat and produce. There's also medical marijuana is a big thing on the Missouri side. So on the commercial space, like that's a hot thing on the Missouri side. They got the football team, obviously, is a big kicker for around the KC Center. Yeah, I mean, there's just so many supporting factors. They're not getting the influx like Texas and Florida, but Amazon does have distribution centers there too. So I mean, they got some pretty solid fundamental core, and it's a wide array. It's not just one, like us, tourism, right? And when COVID hit, we took a massive hit.
Yeah.
So I'm confident that they'll be around in the future.
Yeah, that's a good point. I never thought of that. Yeah, like the number one economic drivers, like, are they all in the same sector or industry, right? Because if that industry kind of suffers, then it could affect the market. Like Seattle is kind of heavy on tech. What would you say, Kikwa? Tech?
It's kind of all the big companies, right? You got Costco, you got tech, you got
Boeing.
Well, Boeing's not
Microsoft.
But yeah, there's some really good ones. REI, Microsoft, Amazon. So a lot of good. Starbucks. Don't forget Starbucks.
Okay. Well, thanks for the insight, CJ, and good luck, Josh, on your deal. Does anybody else have anything they got to that they need? Does anybody have a deal on the line right now that's like close to being in contract or is in contract and needs gap funding? No one?
Nobody needs gap funding? We need to go buy some stuff then, man.
I mean, Corey, you know me. I'm always making these solid offers on some large commercial, and if we can secure something, I'm looking for just pure acquisition because we're moving into the burring of commercial, right? So, it's just a matter of locking one of these suckers up. Again, the market's being challenging because people are overpricing what their asset is. But I'm making offers all day long, and I'll hit you up every moment that we got.
Yeah, let me know.
Where's are you looking at commercial in Kansas City, or where are you looking at?
Yeah, so we're on commercial property 4 and 5 personally. We're finishing up our burr of our first full-blown vacant commercial property. We have multiple tenants looking to lease it up. Once we get that in, I mean, it's a home run. Let's just put it that way. We're looking for more of those. We're fixating on office, medical, government, basically anything with massive room for value add.
That's awesome. What's the price point of that purchase, just out of curiosity?
For ours, our single tenant with the option to make 3 tenants out of it was purchased at a little over $250, and we put in $70. Once it's rented up at the most conservative base rate, which we're probably not going to get, we're going to get more. It's going to be estimated to be valued $800,000 plus. Open market is asking for a property like this performing 1.2 mil. So even if we wanted to flip it at 1031 into the next, I mean, we got options.
That's awesome. That's good. And are you finding these off market or just LoopNet, or where are you finding the deals?
It's so funny because this was on LoopNet, ready to die, and we just saw the opportunity. You know, look for motivation, no different than residential. Got direct to seller, got to interview the seller directly, tried to make a win-win, and satisfied his pain point.
Yeah, that's awesome. For people who are thinking about commercial and coming out of residential, how was the loan process for a commercial for this deal?
Oh, this one we bought cash. I mean, it was, you look at 250. If you're flipping here in Hawaii, that's your secondary position. You know, so if you're playing with $250,000 in private money lending, you could easily purchase something like this. I mean, it's an 8,000 square foot building on a half an acre lot with 3 parking lots. I mean, that's the prices I'm playing with in Kansas City. So lend wise, I like commercial because they don't necessarily look at your personal. Your DTI and all this stuff doesn't really matter, right? It's asset based. Because we have so many residentials and we're technically not employed by anybody anymore, we can't qualify for these traditional 30-year fix or Fannie Mae products. So we have to be open to all these alternatives, which commercial provided us with that.
That's awesome.
Yep. That's crazy. We can't fathom the numbers, but it's backwards because I can't believe how cheap things are out there or in other markets. Like you can barely buy a parking stall for that much, you know, here in Hawaii. So, hey CJ, Helena's just asking in the chat, what was the name of the medical company out there again?
Cerner.
Cerner? How do you spell that?
CERNER.
Got it. Okay. And then Tay is negotiating a short sale with the bank and should be closing in 2 to 3 weeks. Okay. Tay, do you have you want to give us some insight on that deal? Oh, she's at work. Okay.
This isn't work, Tay. This is your main job.
Oh, the guilt trip. Oh, she'll post on the group page. Okay, perfect. Right on. Good. Thanks, Tay. Well, good luck with that one, and we'll see if we can help you stitch that one together. And then Roshan's asking what gap funding is, which is perfect because we wanted to kind of bring about that topic. So does anybody want to tackle this one? Anybody?
Let's have Keone chime in on that one. He uses gap funding.
He's on the phone. He's probably taking down some deals. Okay, somebody.
Anybody use gap funding lately?
Everybody.
Everybody should be using gap funding.
Okay. Why don't we call in Josh? Josh, tell us what gap funding is.
Well, basically you have your first lien position, which is your big guy who's going to, I guess, have no risk in the deal, really, because they're going to do 80% loan to value. And then gap is going to be covering the other 20% that's going to be in second lien position and any of the rehab budget that you're going to be needing. So gap kind of takes more of the risk in the deal compared to the first lien position, but normally they'll have a better interest rate. It depends, but yeah.
Perfect. Yeah. So like what Josh said, gap funding usually is any funds that you have to either come out of pocket personally or raise in private capital. So from private money lenders. So let's say it's a deal that you're flipping, like a buy, fix, and sell. then you can get a hard money loan to be in first position, and they will usually cover up to a certain percentage of the purchase price and a certain percentage of the renovation budget. And so they will cover a majority of the costs to acquire the property and renovate the property, but not all of it. So gap funding is all the funds that you need to not only close the deal, but take it all the way through to either sale or refi or whatever your exit strategy is. So it usually covers your down payment, your portion of the down payment. It covers any interest reserve that you may need. Like if it's a 6-month deal that you project, then, you got to pay monthly interest typically to the hard money lender or whoever's in first position. So that falls into your capital raise for your gap funding. And then also for the construction, you usually have to raise a portion of the construction, because even if hard money gives you 100% of the renovation budget, they won't be the first ones to fund the project, right? So you have to come up with the first tranche of capital to start the process of fund control. And then anything for closing costs on the front end and miscellaneous holding costs, which is like utilities, electric, water, sewer, taxes, will fall into your gap funding capital raise as well. So that's what gap funding is. And with that said, I wanted to kind of highlight or kind of open it up for discussion to everyone and see how many different ways somebody can pull on their capital to lend in second position as a private lender in gap funding. So I'll start it off. Many of our investors use HELOCs, home equity line of credits, right? So they are usually, HELOCs is a very unique strategy because not many people know about it, right? Not enough people know. And I always use this example, and I was kind of using it the other day, but all it is learning different strategies in this game, and can change a lot for you. So let's say Auntie down the road, right? That she lives down the road. She's just getting by paycheck to paycheck. And she's kind of just making all of her expenses, right? So she's struggling, but maybe she owns her house free and clear and it's worth like 800 grand. And she can pull out possibly 500,000 in a HELOC, right? She can take that 500,000 and go invest it with maybe Richie. And let's say Richie pays her 12% interest, right? She's pulling on her home equity line of credit from the bank and giving it to Richie. So she's paying the bank maybe 2%, and maybe Richie's paying her 12. So she's making a 10% return on her money. That's almost about $5,000 a month in income, right? So someone who might be struggling and think that they have no options, just by teaching them a simple strategy, it's possible that they can tap into the equity of their house, leveraging the bank and lending it out to an investor like Richie, who's going to invest the funds and secure it with, a hard asset, which is real estate. And she can possibly get paid, monthly, if that's terms that was worked out with Richie. So that's one strategy, is home equity lines of credit with banks. If you walk into a bank and you say you're looking for a home equity line of credit, you'll notice they'll treat you different, especially in Hawaii. Like, they're fighting over HELOCs right now, all the banks. So their rates, start coming down. So it's a very good time to start educating other people about how they can, tap into the equity of their house. Now, there is one thing: banks, they don't want to hear, they're going to ask you, like, what do you need the line for? What do you need the credit line for? What are you going to use it for? And in a sense, like, it's kind of none of their business, but you can tell them, because it's your equity, that you're getting. But they don't want to hear that you're going to lend it to Richie, you know, because they want to hear you say that you're going to fix up the kitchen and fix up the house and make improvements, because basically you're increasing the value of which their money is collateralized on, you know? So what we usually say is like, we just want to have the line for emergency purposes, you know, and we may fix up the house because that might be true. You might want to use some of the line to, you know, fix up your house. But if there's lending opportunities, many of our investors use HELOCs. And basically you're switching it around on the bank, right? Because the bank takes our money, they hold it maybe in a savings account and pay you nothing for that. And then they go out and cut mortgages here and there at maybe, you know, 3% or whatever the interest rates are today, which we'll talk about that too. But anyways, that's so HELOCs is a strategy that many of our investors use. Now I want to open it up to the room, like, because there's many strategies and I just want to take note of all of them, and then we can post it in the Facebook group for everybody that can't make the call live. Richie.
Of course, I got to jump off in the next couple minutes, so I'll just do a quick one. But of course, IRAs, and someone else can touch on IRAs, but buried green money. The reason why I say that is because someone gave me money that was buried in their backyard. And the crazy thing about it is it wasn't on this island. So my friend had a plane and we just flew over to another island and met him on the aviation side of the airport, grabbed his cash, throw it in my backpack. Took me 45 minutes to count the 6 figures in green money and flew back home. So
for real, the guy literally had it buried in his house.
It's buried in buckets in his backyard.
I remember you told this story before. That was a crazy story, by the way.
What, did you? I'm like, why would he do that? He just figured the banks would not give him enough interest, or they were going to rob him, or like...
I don't know what it is, but it was funny because it was all money from, like, he has like 3 daughters, and it was like all of their money growing up, like birthdays, graduation, because some of the envelopes still had their names on it.
Wow.
Yeah. So
how did you infuse that money?
Yeah.
If you don't mind asking.
That's a great question.
That was a tricky part. So on this project, I just decided and agreed that some of the things and contractors were getting paid cash.
So you gave them buried cash.
Yeah.
After he had to brush them off from all the dirt.
Yeah. So I had my private pilot license and my friend had a plane, and we did our instruction together. So yeah, we flew out to one of the islands and grabbed some cash. That was fun. I felt like you guys remember the movie Blow with Johnny Depp?
Yeah.
Yeah, that was like funny. I mean, that's small scale, but for me, I mean, it wasn't drugs, but it felt like Blow.
Yeah.
Well, the fact that you flew there with your buddy on like a charter, like a single engine plane or something, and flew back.
Yeah.
Yeah. It sounds pretty sketchy, but it's hilarious.
It sounds sketchy, but next time you fly over to pick up cash, invite us, man. We'll come along. We got backpacks you could stuff cash in.
Yeah, because I was like, okay, just wire it to me. He's like, I can't wire it to you. It's green money. I'm like, shit. So I called my friend. I said, you still got your plane? He's like, yeah. I said, can we use it? He's like, what do you need to do? I was like, I got to pick up something.
Okay. So I'll call that on the list. Just cash. Cash in the ground, buried cash.
If you go on a plane, right, you can only carry 10,000 or so on a regular commercial plane, or
10,000 is max on your person per person. So
that's why you couldn't
take the extra charter plane.
Yeah.
Oh, that's why you couldn't go commercial then, right?
I just gave my friend like $200 for fuel, and we're good.
That's an awesome story, bro. But that is something that does bring about something. Like, you should always ask, like, what's the source of the money? You know, like, where's the money coming from? Because
if I didn't have the small plane to use, then I wouldn't have been able to get it.
Yeah. I don't know, man. I'd swim over there for 100 grand or however much that was.
So, and I'm curious, how did you meet this guy? Like a relationship in your network or just kind of random?
Yeah, just someone I knew from a long time ago. So he's an investor too. He buys businesses, owns businesses, and all of that, and then they flip houses too on the other islands. But yeah, he just had some cash. I said I kind of need it right now. And I guess I exhausted at that time all of my PMLs, and I just reached out again. At first they said no, and about 2 days later he called me back. Said I do have, but I can't send it to you. He's like, it's green money. So I'm like,
I've never even heard of that. That is so crazy. That's so.
Yeah, it took a while to. I mean, not a while. It took me about 2 days to structure my plane, and then we went.
That's awesome.
That's hilarious. So you obviously didn't need that money to close then, right?
I didn't need it to close.
Because then that's a problem nowadays. If you have just cash, even if you go to the bank with like 100,000 in cash, like, can they even accept that or?
Yeah, they can.
Yeah.
Bro, during COVID, Starbucks wouldn't even take cash. So man, cash is not good anymore.
Cash was never good, but yeah, if you're holding cash, you're losing money.
Right.
That's interesting that guy's an investor. He owns assets, but then yet he buries 6 figures of cash in his yards.
Yeah, multiple 6 figures, but man, they got so many businesses, and that was just like cash money that came in over the years. Yeah, so I guess he just left it that way.
So Richie, just out of curiosity, how were you able to pay him back without, or did you just do it with cash?
No, I just paid him back.
With a check?
Yeah.
And then he probably cashed it and buried it. Well, that's awesome. Is he a doomsday prepper? Is he a prepper?
He's not a prepper, but man, this guy, he's older. He's in his 60s now, but I knew him from when I was a kid, just from family. And he's owned everything, like multiple McDonald's franchises, bowling alleys, dealerships, cleaning businesses, and multiple houses. So
man,
yeah,
maybe that's the secret. Maybe we gotta bury the cash.
Maybe it grows, like literally.
Yeah.
Plant it in the ground, let it grow.
Yeah, hey, Richie, 60's not old. Let's just get that straight.
Yeah, how dare you, bro? No, yeah, that's a great story. Okay, so we got buried cash is an option if you got one plain.
Tay put some good ideas in there for folks that are looking to try to do private investing.
Okay, guys, I gotta hop off.
Okay, Richie.
But if you guys need one plane, I just need 2 days notice.
Okay.
Perfect.
Right on, bro. Have a good weekend.
I think Warren's on here. Yeah, I know you got your license now, so we can go fly together too.
Yeah, good. Let's make it happen. Yeah, I just got it.
All right. See you guys later.
Okay,
Richie.
That's hilarious. Okay, we got. I'm trying to find that. What did Tay say? Oh, home equities. Yep. Self-directed IRAs, retirement accounts. Okay, so let me go back to my list. SD IRAs. That's another big one. Does anybody else have any other options? Solo 401k is from Rafael. Yep. Okay, is a solo 401k the same as it's not, right? A self-directed 401k? No? Okay. All right,
no,
then.
Self-directed 401k is much different, and you have to set it up as a self-directed 401k. And there's only certain companies that do that. And I asked somebody about that last week, the CPA that was on. I asked him about that last week, and he said he would get back to us with one. And I believe it's up in your area, Kekoa, up in Seattle. So maybe he'll get back to us with that. But it's much different than a solo 401k.
Yeah.
Okay. Solo 401k and because I've taken money from one investor, which was a self-directed 401k. And I think it was self-directed. Maybe it was solo, one of the two. And it was actually a very smooth process because self-directed IRAs, taking capital from SD IRAs, sometimes can be a little, there's some hoops to jump through. Not much, but if you're on a tight time frame, sometimes you got to plan out for that, right? Because you have to do things to satisfy whoever the facilitator is of the IRA, of the self-directed IRA. So you might have to just budget a little bit more time in for that. Greg says he uses a solo 401k. Okay, awesome.
And he can roll it over into a self-directed 401k. And with the ones that I've been involved with, you've been able to take money out and loan it to somebody, but you couldn't take it out and use it for yourself.
Right.
I think it had to be, I'm not sure, it might have had to have been asset-based, but it was really neat the way it worked.
Yeah, so most self-directed vehicles are you can't participate, right, in the investment just passively. So okay, we got that. Let's see what else. I know there's more. We got HELOCs, buried cash, self-directed IRAs, solo 401k, self-directed 401k. Nicole, what else you got?
I think those are the main things. I think the ones that you and I have gotten for private money lenders. When I invest private money, it's usually, just from my own account. So there's not really, I don't pull it from something. But I know a lot of people were using HELOCs a lot because for a time, American Savings Bank on Oahu was offering 1% for the first year. Mm-hmm. So if you can invest at 8 to 12% with somebody, then that's actually a pretty good spread for doing nothing but move money from one place to the next. But yeah.
There's life insurance policies. That's another one.
Yeah.
Borrowing against your life insurance policy if it's, that type of policy. Even Daniel said borrowing against your 401k. Is that right?
So I have a question, if you guys maybe could help me out with this, asking for a friend. They have an opportunity. They've just been getting into real estate investing, and they have an LLC set up, and they have also been accepted into a HUD program to buy a property that should be built within 2 to 3 years. Now, having an LLC, is this going to keep their, as far as being first-time home buyers, is this going to keep their company separate from buying a home on a personal, personal level? Do you guys know anything about that?
That's a good question. I don't know.
Okay. I just thought I'd ask because it was.
Ashley might know from some of the transactions she's done. Any ideas, Ashley?
Can you repeat the question?
Oh, sure. I have a friend accepted into a program for a HUD, and they're brand new to investing, and they're going to be first-time home buyers, and they have an LLC set up, and they asked me if they were to buy homes and flip them, if that would ruin their chances to get into the HUD program, because they might not any longer be first-time home buyers, even though they might.
Are they leveraging that? I don't know if this is accurate, but are they leveraging a loan, or are they buying it with private and hard money?
The HUD home?
Yeah, with whatever investment property that they're purchasing under this LLC, are they buying it with private and hard money, or are they using conventional?
That would be with private and hard money, yeah.
Well, that's not recorded. So there'd be nothing at least recorded under their names that they could find. So, I mean, they're recorded, but it would be under their LLC. So I don't think that they'd be able to find out.
He disqualified for the HUD?
No, because that's a business purpose only loan.
Right.
If they're not going to live in it, if they're not going to live in the property, then that's a business purpose only loan, which is it's a different space than conventional.
So what if they wanted to use it as a BRRRR?
If they have it, if it's used as a burn, if they were to refinance it with any type of conventional mortgage, then it would probably affect their ability to purchase a primary with the HUD program or the MCC certificate, which is used for first-time home buyers as well as a tax shelter or credit, rather.
We should we should look into that and check, because that's a good question, because I don't think it does. I think it, because it's a business purpose only loan, you know, even when you refinance, because you're not living in it, right?
Right.
I think HUD is for first-time home buyers, personal residence, main residence.
Yeah.
I would check, but I think that it's for first-time home buyer. I don't know if I want to say it's even if you have an investment property, because like you can't use USDA, for example. So if you own an investment property, you can't do USDA, which is a government loan program. So same as, you know, HUD, because I purchased my first home USDA, I purchased a second home as an investment property, and then I couldn't use my USDA again. But if I had no home, if I had sold it and I didn't own for a while, then I could use USDA again.
Okay. Yeah, it's kind of, I realize it's a tricky question. That's why I brought it to the table, because
it's good to the lender.
That's a great question.
Whatever lender that they want to work with, you should be able to answer that. Pretty easy too.
I'll let them know that. Thank you.
Great question on what's a HUD program.
Pardon me?
It's kind of, Tay asked this question, not necessarily to you, but to kind of everybody. What is a HUD program?
It's housing, Department of Housing and Development here on Maui, and they build affordable housing, and not where you go and build the 10% has to be sold as affordable housing. This is a whole area that's being built here. I think it's 176 homes, and it's just for Maui residents that have been here a certain number of years, and it's just for first-time home buyers, and it's really, really affordable housing. But it's a brand new development that'll be done within the next 3 years. But
That's
it's
awesome.
housing of urban development, Department of Housing Urban Development. So,
yeah, they're great programs for first-time buyers. And so for first-time buyers, it makes sense to almost try hard to qualify that. So that way, if they do have cash, they reserve their cash for investments. But they would definitely want to make sure that they maybe do the HUD first, so it doesn't jeopardize anything, and then invest.
Yeah. Okay. That was my thought process too. So thank you.
That would be my guidance for that is, you know, get into the primary, and especially if it preserves cash. It's a great plan.
Then you can make money any way you want, buy an airplane and rent it out.
Yeah, right. Once you qualify for HUD and you close, they're not going to come back and check, oh, look, you bought 2 apartments or a commercial property.
Right.
So you just I tell clients too, it's like, before you close, don't go buy your new TV and furniture and all that. Like
a new car.
Don't get your credit up, you know, just stay clean, get in, and then go and do the other stuff. So I think in this situation, it's qualify for HUD, get in your house. Once you close, now go buy a bunch of investments and flip them, and cool. That's cool.
Yeah, well, the HUD program too has a whole educational process that you have to go through to qualify to get, and it's also done with a lottery. So you have to be chosen, and then you get interviewed. There's a lot to a HUD program, but for people that are not educated with finances and don't know how that process works, it's really, really a benefit for people, especially the ones that live paycheck to paycheck like most people do. So anyway, thanks you guys. I appreciate your help.
Yeah.
Thank you. All right. Well, maybe this will be a running list, because I know there's more sources of private capital that can be used for gap funding. Maybe we'll put it out in the Facebook group for everybody to chime in, you know. And
couple of things that Corey is kind of cool is that sometimes when people don't realize, hold on a second. Let me fix that. Sometimes, you know, for people that have talked to us, Corey, about private investing with us, is a lot of times people don't realize that they have a network of folks that they can pool some funds together in order to join into a gap funding opportunity. So that's kind of cool. You know, sometimes like Josh's situation, he's like, hey, my mom's coming in and something like that. But in that situation, maybe Josh and his mom and, and uncles, heard about maybe the Makaha 10 unit new construction that we're doing. And they're like, hey, together we've got 200, can we come in? And so they hui together and then they become gap funders. So sometimes if you're new to investing and looking for an opportunity to build gap funders, you can help build gap funding teams with a couple of folks that may be related or network together, which is kind of cool.
Yep. All right. Well, if anybody thinks of any other, I guess, vehicles of private capital, then please drop it in the chat. We're going to compile like a nice list and share that with everybody. But Kiko, you want to talk about, kind of put it out there and just talk about the current status of the financial industry?
Yeah, I mean, I think as everybody knows, there's a lot of changes happening. And I think, who was it that Blaze actually just jumped in and asked early on, anybody hear about the Fannie Mae update? Like, there's just a lot happening. So maybe it's a neat opportunity to kind of get some insights on what everybody is hearing out there. So Blaze, what did you hear about Fannie Mae and what's your thoughts?
For Fannie Mae, I heard they're doing for conventional loans, they're doing a 7% cap, or 7%. Loans are. I meant to pull up the document, but it was from Hardwire. 7% acquisition for loans can be from investment or second home properties. So they might reduce the amount of loans that can be done through Fannie Mae on investment and second home loans. The other issue was they're doing, I think they call it a desktop underwriting, DU, for loans that are, there's DU, desktop underwriting, or manual underwriting. Most of the properties I've seen are manual, or they've gone either way, but that was another issue that came up on that topic.
Interesting.
So the topic so they're talking about the underwriting process, is that right? So they're, instead of using, I actually haven't heard that news.
Okay,
but,
yeah, so I guess the bigger problem was the, I have it posted on my phone right here, hold on. Give me a few seconds. Okay. It was actually on one of the KC websites. It says Fannie Mae tightened standards on investment properties. Treasury amendment means it has a 7% limit on acquisition of single-family mortgage loans secured by second home and investment properties. And part of it is underwriting delivered as a DU loan. Recommendations be delivered as a DU loan, unless LTV is manually done and over 80% LTV.
Got it.
Trying to figure out how that's going to impact for the most part.
Yeah. Well, what is your thoughts on that, please?
For me, it looks like these loan companies will have a limit on how many single family homes they'll be able to put under their mortgage company. So may have to get creative or find a lot of different lenders in that scenario. Just because after a lender hits their limit or 7% limit, then you might have to pivot to a new lender, right? Mm-hmm. Another issue solution could be not getting traditional single family mortgage loans. Try to pivot towards maybe rezoning or duplexes or other things. I'm hoping it's not as bad as it looks. I already texted my realtor friend here, and he said they already do desktop underwriting, so they won't have a huge issue with that. I guess my biggest issue is a 7% limit on acquisition. So that's a bigger issue, and I don't know how that's going to affect all these different loan companies.
Mm-hmm. Right. Okay. Man, can you do us a favor and post a link in the chat if you got that, or where that article is. I'd like to read more about that. Thanks, Baze.
Yeah, I'm writing that down too, man. I haven't really paid much attention to that, but that'd be interesting.
This is why this is like open. We like having an open kind of conversation every now and then is, I think, important, right? Because then we can cover all bases. We can talk about different, issues that someone may be seeing right now that nobody's really seeing, that we can kind of dive into and stay ahead of the game a little bit.
I wonder if Justin Acuna's got any insight on that. Is he still around?
Yeah, I'm here, Kiko. It's kind of all new news to us too, so we're trying to figure out what's going on there. But regardless of what's happening on the Fannie side, account executives are kind of sending out emailers just saying that expect pricing changes. So if you got those second homes or investment properties floating, or you got something in your pipeline right now that you can lock, it might be a good idea to do it, because this change is probably going to affect pricing on those programs.
What are you seeing as locks right now? What are you locking at right now?
It really just depends on the scenario. But everything is right now without pain points, you're above 3%.
Yeah. We had a very strong client with great credit scores, lots of cash reserves, and they locked at 3.7 on a fourplex. And just a few weeks ago it was 2.7, so it's crazy.
Right. I'm seeing multi-units when it spiked, the ones that I was looking at pushed to 4%. And then right now it's playing, from where it was on the low to where it spiked on the high. It's just kind of playing in that middle range right now. And it's volatile on the daily.
It's so crazy every day. It's like you. So this is a good question for you. So when somebody locks and it goes down, can they readjust?
Yeah, unconventional is usually most wholesale lenders anyway. They'll allow you like a one-time rate renegotiation.
Yeah.
So what I like to tell people is a lot of times, people are on the fence. They want, they might want to wait. They always want lower. But I tell them, we'll lock today, and we're going to lock worst case scenario. If the rate gets worse, good, we locked. If the rate improves enough, then we would have the opportunity to potentially ask for a lower rate.
And another question just in general. So if somebody locks with you, say Justin, but they find another lender that they get a little bit better fees on, if they switch, does that lock go with them, or the lock stays with you as lender?
Yeah, I don't think that lock is transferable.
Yep, that's my understanding as well. So one thing with realtors, if you're a realtor and you have clients, that's a great question, because sometimes lenders, if they're shopping around, will suddenly say, hey, let me lock for you, but they don't disclose fully that lock means that they're kind of stuck with them. And then they pressure the client to stay with them. So it's interesting to see how people communicate that piece. But thanks for that, Justin.
I got a question. Is that only for, again, single family homes, or is that also going to affect the 2, 3 multifamily homes up until 4, I guess?
I have some people coming, bro.
What specifically are you referring to, Blaze, in terms of what's affecting what?
Sorry, I guess that change for the loans, is that going to affect just strictly single family homes, or is that going to affect even multifamily homes up until 4, or what is that affecting?
Good question. Justin, you wanna do that one?
A little confused on the question. It doesn't seem like it's affecting the owner occupied residents right now, or according to this letter. It seems like it's just the second homes and investment properties. So whether that's going to be a single family investment or a 2 to 4 unit, I'm guessing it's going to see the pricing hit on both products.
That makes sense.
Hey, Josh, since you're on, do you have an input on Bo's friend who's trying to might be concerned about her getting into private loans with hard money and private money to flip a house, is that going to affect her status, first time home buyer status, for some of the HUD programs or the USDA loan programs?
I think that's kind of a gray area too. Because yeah, she doesn't, might be a business investment or property, but it may be looked at that, yes, I mean, one way or another, she does own property. So I have a lot of these questions too with, I own a property, got married, my husband or wife doesn't own property. Can they be first time home buyer? And a lot of times they say, well, how do you guys file taxes? Even though she's not, one spouse may not be on the title or loan, they're still taking advantage of mortgage interest paid on their joint taxes. But you guys were kind of touching on, to make sure that she would qualify for that HUD loan, it'd probably be best to secure that loan first, or that property.
Got it. Yep.
Thank you, Justin. That answers my question, and that's kind of what I felt too. So that's perfect. Thank you.
You're welcome.
All righty. Okay, cool. Was there something else we wanted to talk about on the interest, on the changing in the interest rates and stuff?
No, that was good. Justin definitely hit just the fact that it's just so volatile right now and nobody knows, and every day it changes. And so if you get a chance to lock, and especially if you're working with other clients, it's important to over communicate. This is this type of market where there's so much uncertainty, and agents like Ashley would be able to, communicate that piece of the stress of a changing market when you're trying to help guide other people. I think as investors, the changing rates also helps us to kind of consider, what's going to happen when it comes to off-market opportunities to purchase properties, to flip, or buy and hold. Because that uncertainty in the market starts making sellers start to wonder, maybe I should sell now instead of holding on. So there's some, if you're a direct to seller, wholesaler type, it's a great opportunity to just get back on the phones or follow up with some people that were just like, well, I'm not sure yet. They weren't sure because they were trying to see if the market would go higher so they can get more money. But with more uncertainty, uncertainty leads an opportunity to actually negotiate a better price. So I'm really excited about the changing market right now. Interest rates going up isn't super exciting, but at the same time, I think it's a really good opportunity to see what we can be looking for with the changes, and eviction moratorium starting to get lifted. There's just a lot of changes that are going to be happening here, I think, in the probably next quarter. So quarter 2 is going to be pretty pivotal. That's just my take.
No, yeah, it's so interesting these times because if you look at the stock market too, right, for a long time, it hasn't been making much sense. Right. And that just shows the type of uncertainty and volatility that's out there. They're talking about just how different, Wall Street is from Main Street, right? The kind of the fundamental economic situation that we're in. So it's a huge question mark. I have no idea what is going to happen, but all we can do is do our best to take our best guess, take calculated risks, right? And always try to be better, it's better safe than sorry, right?
Yeah, being conservative, I think, even for you and I, Corey, you and I talked about, right now there's a few new builds we're working on. It's probably a good idea. Let's just sell them quick. We're getting high prices, but not hold them so long. And then, for us not to get in the frenzy of overbidding on projects. So, it's a good time to just be careful right now, but it's also a good time to start saving a little bit of cash, I think, because if the market has more uncertainty, there's going to be a lot of panic. I mean, you see it on Wall Street already. There's panic selling, then there's panic buying, and panic selling, and panic buying. So we should have bought some Bitcoin about 3 weeks ago. That's what we should have done.
Yeah. Well, I think right now for our market in Hawaii, and actually, have you seen any difference or change in the housing market since these changes with the interest rates? With houses that are on market that we're listing, or Like,
well, we're seeing in Vegas and in Seattle more frenzy because of the uncertainty. So it's a weird little. I think it could be a gap called the frenzy before the storm, almost, because people who were waiting on buying or thinking about or looking for a while are now they're just going crazy. So I think our team's probably put in 7 or 8 offers in the last 48 hours. And we come in strong, we come in cash. And I think we've lost out on half of them. It's crazy because there's so many other people who are way overbidding. So nothing's appraising right now, which is nuts. And so, as investors, it doesn't make sense, so for us to get into, it makes sense if we're selling because we're in a good position. But right now, unless you're direct to seller and really negotiating it down, it's a crazy market right now. I feel really bad for people who have to buy in this season. But
yeah, I don't know what to make of it because all of our calls lately on MPLA, it has been kind of good news, like they were saying, like, the feds have been making good moves in their opinion, and helping to stabilize the economy. But at what price is the question, and when is that price going to be, when is that going to come due, is the question. But it didn't seem like they were concerned about anything in the near future. Although when you see the median price of a single family home in markets like here in Hawaii go up $200,000 within 2 months, it kind of makes me feel like, all right, where is this going to end? Because it's got to end at some point, right? There's got to be absorption of the market where I don't think we can keep going at this pace and have it be sustainable. But knowing that there's a lot of money being pumped into the economy, so maybe, I don't know. That's the one factor that we can't predict. Like, what is that going to do? And when is it going to make changes? So like Ikola said, we're kind of, if you're sitting on dirt, like, now's the time to get moving, I think, because not only is the market hot, but also you don't want to be stuck with just dirt when the market turns. That's the worst. So
Corey, do you guys remember the 2007 crash?
Mm-hmm.
Yeah.
I wasn't in the business back then, but I remember it. Yeah.
It's like late 90s, really late 90s and early 2000s. Boy, it was just like this. That's for me, I just remember it so distinctly because a lot of my friends lost their jobs in 2007 and their homes. Mm-hmm. And with everything that we've gone through with COVID, I think, I don't know, and I can't predict it. Of course, I can't predict it, but I'm seeing so much of the same wavelength. The difference is the interest rates.
Yeah. There's another factor too, because after the crash in 08, I've studied a lot on the last, the Great Recession, because I'm always worried about it. I never been through that, never been through a crash. And so, but always asking people who are smarter than me, who have been in business, in the real estate industry a lot longer than me. And like, I think there is a big difference between now and then. And the big difference is the government put a lot of regulations on the lending space, which rightfully so. It's when before there were, it was the era of the ninja loans,
money, right?
Income, no job or assets. So everything was just inflated, and those were dirty loans, like dangerous. And so it was very fragile, but people didn't know how fragile it was. And then we found out. But I think since then and all the regulations that were put in place, I think we're a little bit stronger and healthier to take on like big pullbacks and not have everything collapse like last time. That's my opinion.
Thank you.
But,
that's a good opinion.
Yeah, but like you, it is scary. It is scary to see the prices going up. So, I mean, for us, like within the last couple of months, I mean, we gained like almost 1.2 million in equity in one of our, development projects in Makaha, of all places,
Oh.
So I should be like cheering and yeah, but I don't feel that for some reason. You know, I'm a little bit concerned, not just for myself, but for, you know, because for everyone. And if the market if the housing market collapses, it's not just the housing market, it's the economy as a whole will take a hit, because the housing market is a big indicator for the economy as a whole, right? It's a big driver. So
I think the difference now too is so many people are coming in and buying these homes with cash here on the islands. And back then, I think it was a lot of people from Asia that came over and bought a lot of properties for over market value. They just came over and bought up everything. And then, boy, when it crashed, it took a hit on everybody. But
right. And I think one thing too, you have to follow the money. Like, where is the money moving? What is the money doing? Because the smart money, you know, when there's times of like now, where cash is losing value by the day, the smart money is moving their money, but where are they moving it to? Are they moving it to real estate? Possibly, you know. So we got to watch where the money goes and what they're doing to it. I think that's my lead indicator, you know.
Good lead. Thanks for sharing.
Yeah.
Makes a lot of sense.
I heard a very good, sorry.
Go ahead.
Yeah, I read a very good article that presented a picture as the Feds being between the rock and a hard place, which is inflation or increase in interest. They can't increase in interest because that would kill economy. So they're kicking the can down the road. In the meantime, we have inflation. So will they sacrifice? Will they ever increase? Probably, the article says they would rather take the inflation, the deflation of the dollar as it's going, and keep the interest low for however long, might be very long.
Yeah, thanks for saying that, because the Fed gets a bad rap a lot of the times, right? Because they're always in like a lose-lose situation. And whether it's them to blame, that, you know, I don't think we're really in a position right now to point blame to anybody, because that's the system that we're on right now, right? That's our monetary system. And so we just got to roll with it and make the best decisions. Now, the Fed, I think that's probably got to be one of the most complex positions to be in right now, because like you said, they can't increase interest rates, but at the same time, how long do we go inflating the dollar, you know, and I was watching Jerome Powell, right, from the Fed, and he was asked that question, like, who's keeping an eye on this bubble, you know, this, and he's like, oh, we're keeping an eye on it. It wasn't really a great response, to be honest. There was no real content behind his explanation other than they're keeping an eye on it. Now, maybe he can't say certain things because his words move markets, right? So he has to be very careful with what he says on a public forum. But I think the Fed, it's going to be very interesting to see what they do, and we should all keep eyes on it. And even like large institutions like Fannie Mae. So like what Blaze is kind of pointed out is important. We should all keep eyes on. Interesting times for sure.
Yeah, I don't think interest rates can stay this low. It's kind of too low unless the government forces it to stay low. They would really have to, I guess, make an intervention and force it to stay low, especially with these new orders coming out with Fannie Mae. Again, like Justin said earlier, it's going to go up. And my realtor friend also said, hey, rates are probably going to go up after April 1st for the secondary market and investment properties. So rates are going to go up. I don't know if it's going to be for, again, your regular market, but for secondary market, it's going to go up unless the federal government comes in and tells them, no, you have to keep it below this, or they make a ceiling, yeah, more than likely rates are going to go up. Inflation, I mean, things have to get a little bit more inflated too, but yeah, I think the current interest rates, they're not really sustainable long term. And it's, again, like everybody's kind of overbuying right now in a sense where there's nothing left on the market. So it's a little bit, this rate is probably a little bit, it's probably making things a little bit worse, and less stable than helping out. So it's got to go up at least a little bit, even on the other end.
Yeah. And with us inflating the dollar, like, does that even, and printing cash, right? My question was, does that even matter? Like, I think because the dollar right now is the world's leading currency, right? But what happens when we lose the trust in the dollar? Will China be kind of leading the leading economic, country of the world, or, what? And then are we gonna have to all switch to, their currency? And I don't know. And somebody said, I can't remember who it was. It might have been this guy, Jason something. He's an angel investor, and he did an interview on CNBC, and he was debating with somebody else about Bitcoin. And basically the guy for Bitcoin was saying that cash is done. We're going to be all on digital currency eventually. And so I see his point, but also what was saying, like what the guy Jason was saying, was that the dollar is, until the world loses trust in the dollar, then only then will we see a massive shift in whatever leading currency is kind of being used around the world. So I want to get maybe some of you guys' input on that. And his argument was that, look, it's not just about America's, I guess, economic status, but it's also, we have the world's leading military, a lot of infrastructure that's built in to the US that is backing the dollar. So that makes sense to me too, so I don't know which way to sway or lean towards, but maybe if some of you guys who do own some Bitcoin, like, get your opinion. Because to me, it seems like, okay, if everybody switches to digital currency, what's stopping China or the US of starting their own cryptocurrency and forcing everybody to use that instead of Bitcoin? And then all the people holding Bitcoin, that the fun is over. Anybody have any opinions?
For my take, I did watch a little short video on Bitcoin and the difference between that and the U.S. currency. And I've owned at least a few units on cryptocurrency and done some research on that. But for the most part, what adds value, just like kind of like stocks, is everybody else for the cryptocurrency market is everybody else around it, right? So everybody who puts value into it or says, hey, this one Bitcoin is worth $40,000, or this one thing is worth $100 for these cryptocurrencies. That's what's kind of adding value. Kind of, again, similar to the way we evaluate a company, and we're putting what the value of that particular stock is. And I guess the U.S. currency is kind of the opposite way, where the U.S. is telling us what is valued, and everybody's taking it from the U.S. Now, as for our dominance, what really matters is what the rest of the world thinks of the U.S. If we are still a dominating force, what kind of how are we making ourselves involved in these different countries? That's another reason why the military and we have the military and all these other things all around the world. It's not just for fun. It's also to show dominance, to show assistance, to add value. We do a lot of humanitarian stuff. But it all kind of commingles in the end, and you really can't see that picture until, you know, unless you're really looking at a giant, large scale picture. With that being said, the US dollar is only valued if other countries also see it as a value. If other countries don't see it as a value, it has no value, of course, to the rest of the world, which would then ruin the economy.
Yeah. Yep. Yeah, that's the question I think that's looming over everybody. And the great thing is that, you know, the market will tell us very soon. Like, yeah, we can't, the market's going to do whatever it's going to do. And we got to just obey and ride the wave. So it's interesting times for sure. With that, like Paul Brubaker is going to be speaking, I think, very soon, or he might be speaking right now. And that's Hawaii's like kind of leading economist. And I actually respect what he says. Like, I agree with a lot of what he says. So it's funny because when you're just getting in, I don't know, maybe you guys can relate or not, but when you're just getting into real estate, if you're new and stuff, all you care about is finding the next deal. How do I find the deal? How do I find the money? Who's going to give me my money to go flip a house or buy a apartment complex? But really, as you go deeper and deeper into the real estate investing industry, it really does, the conversations that we have today, especially in these times, are very necessary, right? So I thank you guys all for, you know, collectively being here on a Friday and giving your input, because it really does give confidence, right, to not just Keiko and I and all of our team, but everyone else that's, you know, might have the same questions. So we're all in this together. So it's gonna be, no matter what, it's gonna be a wild ride, but it's gonna be worth it. So I wanted to just say one last thing before we get off, for those of you who have stayed. So we're gonna be cash heavy for a while. Our companies, me personally, and you know, Keiko and all of our team. And so we will be looking for opportunities to invest with, you know, people, especially people who come on every Friday and are, you know, helping to chime in the conversation, and we're building a relationship, even though it's remote. We'd love to look at opportunities to either partner with you guys or be your gap lenders. So very soon, actually, we're kind of setting things up. And a lot of it may be our own capital, and some of it will be capital that we're facilitating and we're managing. So, but just keep us in mind, and hopefully we'll be closing deals with many people here on the line. So with that said, just a quick reminder, Mr. Alexander, he keeps coming on and off, but in 1 week, we expect him to, you know, finish his 75-day challenge. That thing was kind of brutal. I don't know how. It's very inspiring. I don't know how he's doing it, but we'll have him share maybe next week. And I'm glad it falls on a Friday. So we'll have him share next week how that was, what he learned, his experience through that. And I think there's a few other people kind of right behind him that took the challenge. Let's check in and see how they're doing. So with that, thank you guys, everybody, for chiming in, and we'll see you guys next week. Have a great weekend. Have a happy Aloha Friday. All righty. Keiko's got controls, so it's gonna still be recording, but we'll talk story for a little while. Hey, thanks Blaze and Bo for you know, the conversation, because it's great to kind of keep things rolling. I just had like three things that I'm gonna go look into after. I swear I get more out of these calls than anything else. So
so do I. And Corey, that friend of mine is me. So I just wanted to say that up front.
Yeah.
You know, I didn't really figure everybody had to know, but I just, because I'm in between spot. And I mean, I have an LLC, but it's still, my LLC is under my social security number, even though I have a Duns and Bradstreet credit
Right.
You know, so it's just, and I don't want to blow it because I really want to get a home, and this is a really good opportunity for my husband and I. But anyway, thank you. I'll figure something
absolutely.
out. Maybe
if I can, I know a couple of brokers that that are real close to kind of like the money, and I'll ask them on that side.
Yeah, I mean, I might be able to ask my kids if I could put it in their name, but it's my business.
Mm-hmm.
So are you able to put the loan just under your husband or just under you so you can kind of separate it?
Well, we file our taxes jointly.
Sure, but the loan itself, are you able to, I guess your other loan, are you able to put the business and the business loan just under him and take your name off or take his name off, and then that way one of you guys should still be first-time home buyer?
Well, wow, that's a really good question because both of us would qualify.
I don't know. I'm making this up. So this is a question
both
for
of us would actually qualify for being a first-time home buyer today. And both of us have good enough credit to where we can separate everything. But I would just hate to lose out on this project because, I mean, the homes are way more than they're worth, or way more than we'd be paying for it. And it's just a really good opportunity for us. I mean, we've been involved with this before with Nahalio Maui. You know, you signed up, you went through the educational program, but that was at the point in 2014-15 when things started to really change and prices skyrocketed, so to speak of. There were just no more houses left for pretty much under market value. People weren't losing their homes anymore. And then this just kind of fell into our laps, and it's like, wow. I mean, I go out and I put offers on houses all the time, but watching these properties get taken by some of them like $200,000, $300,000 more than they're even, I mean, they're going to have to put $200,000 or $300,000 into them. These properties are not worth investing in my opinion. And they're having people come in with cash offers and just taking them away. So I'm just kind of taking a little stand back right now and trying to figure out whether I should just put my business on hold for a little while and just wait till we get our home, and then I can go right back into it. But I don't want to lose connection with all of you guys because this is, like you said, Corey, I love my Friday mornings with you guys with Coffee Talk. I learned so much.
Yeah.
You know?
That is a tough call, but go ahead, Warren.
Yeah. So I don't know, I guess a comment. So when I bought my first property, I bought it as a first-time home buyer, and my lender mentioned something like to the title as first-time home buyer. Don't quote me on this, but I think if you haven't owned a home within like 3 years, you can qualify again for a first-time home buyer. Mm-hmm. And I think you mentioned that the property that you're trying to get under the HUD program is going to be developed in 3 years. No, how long till it's developed? 2 or 3 years?
It will be developed within the next 3 years.
Oh, I see.
Yeah, figuring within like 2 years, they've already started on putting houses up in this area. And they say 2, maybe 3 years. So we won't have the opportunity to do something and then go back to it. And I know I should be thinking in the investor process as well, don't worry about getting that house. Just, you know, go flip some houses or go buy some burrs and then go, you know, this is how you find good properties. But there's nothing out there right now. And I'm just thinking that what if I did one, then I would blow my whole chances.
Yeah.
So
Hawaii is a tough market, so
or maybe I could
partner. You might have to change markets.
Oh, there's CJ.
there's opportunity everywhere.
Stuck in there, right there.
ow.
Nice plug right there. I love it.
Keikoa brought up a good point. Are you look at the opportunity. So my question is, are you asking the right questions? I don't believe that there are no deals available. It's where are you looking, right? And figure that out. Because to chime in on your situation, my question to you is, are you getting this massive return being on the HUD program versus what if you were to actively begin investing and just make a buttload of money? Who cares what you saved on the HUD? So I'm a firm believer in if I'm not going to be able to afford this, now I need to ask the question, how do I afford this? I go make more money.
right? So I don't look for these discounted programs. I just go make more money. And if you want to be an active investor, go be active.
Yeah. CJ, my biggest problem with certain things is I can't like go out and get a job like everybody else because I'm on a pension, on a trust through Teamsters. And if I were to go out and get a job, they would actually take my pension away from me.
Why do you need a job?
Well, I'm just saying this is one thing about it, and keeping my business separate from an income. It just would be nice to qualify for one of these homes because these are much nicer than I ever thought possible. You know,
yeah.
if it was to afford here on Maui.
Right. So let's say that you did this active flipping and you were clearing the profits that most flippers make here, and you did 3 or 4 projects. I mean, wouldn't you be able to buy a property with that?
I'm not interested in flipping and that. I'm interested in BRRRR, keeping, you know, want to keep properties, because if I can get properties under market value, I want to keep them. I want to rehab them. You know, I want to keep it and keep it for people for affordable housing. So my goal is to keep properties here for people who live here and make it affordable for them to live here. This is my way to give back to my community. This is my dream. And I just don't see it as to buying it, rehabbing it, and then flipping it, because it's going to go to somebody that's not on island. And that's one of my biggest drawbacks.
Where are you again, Paul?
Maui.
Maui?
Yeah.
Well, I think that is a good, I mean, that's like the logical way to look at it. But I know it's different because if you're gonna be your first like kind of home residence, like it's more of an emotional purchase. But how much do you, I think CJ is saying, like, yeah, how much will that HUD loan program really save?
Right.
And so at least, you know, at the very worst case scenario, if you can't, you know, if we ask the right people the right questions and turns out, yes, you know, going with private loans and purchasing properties to buy, fix, refi, that will count against your ability and disqualify you from getting the, you know, USDA or HUD loan. How much is that really worth? Like, how much do you lose, you know, in a sense of how much do you have to put down now for, you know, a regular loan? I think you would find if you run the numbers that it's actually not that much. It's actually not that much. I don't think so. But again, like I'm just guessing. But if you can do both, like if hopefully we dig in a little bit, we ask the right people the right questions, and turns out, you know what, we could. It's a little gray area, but you know, we could do that, then go forward. But
yeah, I've actually been sitting down and I've been thinking about it so deep, because when this was presented to me, it's like, oh my gosh, I haven't flipped a house yet, or even been able to have one go under contract. And I'm almost in a position where I'm kind of grateful for this, because this might be the path in which I was chosen. Yeah, and then maybe in 2 years, when we do get this home, then I can start doing the BRRRRs, and that will come into my retirement for myself. You know, so I'm kind of going through this, and CJ, those are great answers. And, you know, I do have a lot to think about, and I'm thinking a lot about it.
Yeah. So. Yeah. I think, well, it's good because we have to think through. I can't believe, like, I thought maybe somebody on the call would know. Maybe they did know. They're just a little shy. But
I didn't remember to say, hi, I'm looking to buy a house cheap so my husband and I can have a nice home. And I just didn't want to put that out there, you know.
Yeah.
Something that's really affordable, that's absolutely 10 or threefold of what I could get on this island for the same price. I mean, these homes are like, start at $559, and they're beautiful, 2,228 square foot houses with garages and 4 bedrooms and in a beautiful area. And it's like, holy moly, this is, even though it's a HUD property and you have to live in it for 10 years and everything else, I'm not going anywhere.
So, I live in a HUD property right now, and the living requirement was 4 years, and it was 120% medium income requirement. So again, the biggest question is, how soon can you move into that HUD property? Can you like move into it within the next month or two? And if that's the case, or how long is it going to be until you can move into it?
I'm estimating 2 years, but I'll know by the end of the month.
Oh, 2 years. I mean, that's a long process. Yeah, two years, a long process. I mean, again, these are already built. I was wondering if, I guess in Maui, there was one that's already kind of built. You could jump into that initial program and you just buy off the regular market. Again, if you're making enough, if your income to debt ratio is good, then it won't really affect you as much. If you can find something now that's not going to take 2 years out. If it's going to take 2 years, that's a very long time. And just remember that the burrs. If you wait, I mean, you can always structure a little bit differently. It takes 6 months before you can refinance out, so keep that in mind. And you can always structure your lens to be longer term if it's from someone you like really trust, like your family or friends. So you can probably structure it to be like 5 years and not consider it not consider it under just one of you guys, or just under not under both of you guys for the LLC. I don't know if that's a workaround, but you might want to ask that question too. But yeah, a lot of things to think about.
Yeah, definitely. Thank you.
Thank you, Bo, and thanks, Blaze.
Yeah.
Hey, Kamohai. How's you guys through the sub 2 training and stuff like that you guys were doing?
Yep.
Yeah. Would you and Tristan or someone from the team that you guys are working with want to come on and talk about sub 2 and stuff like that sometime? Totally.
Guarantee. Would love to.
Awesome. Yeah, it's been a while since I structured a sub 2 deal, and I'm even curious to see if there's has been any changes. It's probably been 8 years, 7 or 8 years since I did a sub 2 deal.
Yeah, totally. I mean, and there's so much more than just sub 2 too. So, I mean, let's connect and we'll figure it out, but we'd be stoked to put something together and just answer questions. I feel like a lot of people have a ton of questions, right? Yeah. So sometimes it's even easier to structure it that way. Like just go over a little bit, but just
instead of starting from,
for questions, because people have like specific questions. But yeah, no, we're totally down. I mean, our crew's growing. We have there's probably 12 of us in the mentorship from Hawaii now. Like Tay's in it, Zasha, Daniel, Kong, Keone just joined. Keone. Nice. So I'm actually putting on a meetup at the end of this month at one of our fix and flips. And I was going to talk to you guys about it, but I'll try and connect with you offline. But then also, so not this one, but in June or July, trying to actually get Pace down here, our mentor.
Perfect.
So maybe we can have him on or something like right around that time too, because he would be like unreal to just he loves sharing. So yeah, he's a big go-giver.
Nice. Okay. Oh, I love that. Yeah, that would be awesome. But I would like to hear it from you guys too. And sometimes I know for myself, it is very true that sometimes when you're learning something, the best way to further learn is to teach it, because it helps you to regurgitate and try to, maybe while you're explaining it, when someone's explaining it to you, you can't put all the pieces together. But when you're trying to explain it to someone else, you're able to put the pieces together, so I know it does, helping teaching people also helps you regurgitate and learn and comprehend, right? So
I'm a firm believer of that. That's definitely true. So yeah, well, stoked, man. I'd be happy to. Yeah, guaranteed.
Okay. Yeah, we'll do that then, because I'm really interested to see how if anything's changed and brush up and learn more, so, and even situations examples of that, because sub 2 deals are not easy to piece together if you're just fresh into it, the first deal I ever did was structured as a sub 2 deal. And the first time I was kind of just, I don't know what just happened. I had to walk through it with Jonah Colgan, and he was kind enough and gracious enough to sit me down and tell me exactly what to do and how he did it, But we didn't even go through escrow. Like, we didn't go through escrow. We just, signed we just met at the bank in front of the notary with the seller, and just, to me at the time, I was like, we just signed a bunch of documents, went down to some place in downtown and gave them the documents and paid them some money, and that was it.
That's crazy.
And Jonah had to tell me what just happened here. And basically we're, taking title at the time, and
right.
We didn't go through escrow. We just got it notarized between the seller and recorded it. So
crazy. Yeah. I mean, I think it's just another tool in the tool belt, right? But being able to offer as many solutions as possible, that's what we're here for, right? So a lot of the deals we were coming across, even like just our off-market stuff, didn't meet our certain criteria, but that if we can offer another solution, then, and I think a lot of people too might be, when people don't understand something fully, they think maybe, you shouldn't do that, or that's illegal, right? Or there's some misconceptions about certain creative finance strategies. But if you have like the full picture and understanding, it is a very useful tool in specific situations, right? So yeah. But
the subject too might also help get around that whole Fannie Mae issue too, right? Because they're the subject too, they still own the loan, right? Or you're just paying them for the loan. Is that correct? And so
the loan stays in the original mortgage holder's name. Yeah, title changes hands, but mortgage stays.
That's another workaround for that whole Fannie Mae thing. I mean, that's something I might have to get better at myself if loans rates are too high.
Yeah.
Yeah, I mean, in the creative finance world, and there's a lot of people that have been doing this forever, right? Like Pace is just one person that's really loud about it, and he knows how to utilize social media really well. So he's well known for it, but everybody's talking about how useful these tools are going to be in the upcoming year to 2 years. So I mean, I'm a firm believer in that, and if everyone can get educated on it and be able to use, some of these tools in certain situations, I think it would be a big benefit.
Yeah, I seen his post on IG for his Oshlish page, so I might try to add him too.
Yeah, super cool guy, go giver, like to the core. His mentorship program is unreal as well. So
that's awesome. I'm excited. Yeah,
totally.
That'll be great, because sub two, could be a powerful strategy. And like you said, is people are afraid of things they don't understand, and they're quick to deflect, but that's okay. People are going to have their opinions no matter what. So
yeah, exactly.
That's why we stick together. But